Hope you're doing great. Now we have to move forward by completing the day three, and then we will move forward with the day four. So, yesterday we just worked on explore regarding the graduate environment and what it is. So, we have a minute. So, things will be all right now. Yeah, we're good to go. Okay, so what it is. Different credit, we can go and review it. Okay, so it's like a vocabulary. So what's debit? That's the initial uh, point of the transaction where from where the no, sorry, debit is the end point of the transaction, and credit is the initial point of the transaction. So it's like this way, then good for understanding. So hopefully you get the point. And we've done it very in too much detail. So I think so you have the idea. If not, I will try to uh, make the articles on it so we have much better idea. So we have that answer, this one as well, this one as well. Okay. So now the equation question, which is I'm unable to understand how the assets and liabilities and plus equity get balance with respect to the debit and credit pair. So we will explore that part now, uh, which is here. Okay, so let's explain, explain. Ah, okay, that's the equation for the we can say the balance sheet. Yeah. Okay. So that assets, it doesn't mean that you own that value. It means that your business contain that value. Liabilities, what you like borrowed and what you don't own. Equity means what you own in the business. That's it. Got it? And that's why it is uh, balancing because it is asset means containing of the value liabilities. Other guys own that value from the business, and the equity means you own that value from the business. Okay, and that's it. It's not just a method computer company structure. Okay, so assets, everything in business owns and controls that has value. There's it. Cash entity, equipment, so all that value come into this one. Liabilities, everything business own, and this heavy capital. I think so. We have to go through with respect to the uh, keep the currency in dollar and explain me this with respect to debit and credit because where it's it's having confusion when this stays true because every debit credit here keeps both sides balanced. So how? That's the point. Hmm. Okay. We likely to create a balance sheet. Like, so there's a glitch in the screen sharing. My screen went off. There's a glitch in that app. Okay, ChatGPT is hanging right now because I'm working on a project and the thread becoming long and long and long. So I would expect that mm, that will stay. I have to get the solution for it every time. Okay, perfect. So this is a true fusion point of accounting and logic connecting the balance sheet and the other debit and credit system. We already get that debit and credit in detail for quick overview. Debit from like credit, where the transaction start, the starting point of the transaction, from where the money go away, and credit and debit means where the money land, the destination point, or the conversion of that value. So in what value it is converted. So that's the debit. So credit starting point, debit ending point. That's it. So now the debit through a simple direction that keeps this equation balanced. Assets increases with debit because increases with debit. I think so it means that uh, when the value end in the asset, that means it's debit. So it increases the asset of your business. Decreases with credit. Okay, I'm getting now. When we credit someone, like we give money to someone, then that cash gone from our asset. Okay, so that's why it is saying that assets decreases decreases with traded because oh that's the starting point of the transaction we are giving away. So that's why assets decreasing with credit. So someone comes to me and asks that I will keep that you can say that inventory of yours with me at my store, and then when it is going to sold out, I will pay you back. So um, I give that book, notebook, as a credit to their store. So what happened is that my asset gone away, something like that. So that's why my asset uh, decreases, and it increases with debt, such as we receive something from someone, then it is going to land in our account. So that's a debit. So it increases with debit. So that's what my mind making sense out of it. Liabilities increases with credit, mm, uh, decreases with debit. Oh, what does this mean? Um, what does this mean? This means liabilities, credit. Credit me liabilities. So what I would say that liabilities increases with credit. So when we give away something or we pay someone, then liabilities increases. So that's where the confusion coming. Equity increases with credit, okay, and decreases with debit, okay. Revenue, income increases with credit, it decreases with debit. Expenses, debit increases with debit, decreases with credit. So, okay. Hmm. Okay, so I think so. They will explain later on. Debit debits increase what you own or spend. Okay, because what you own increases with what you own or spend. Hmm. Why? Credits increase what you owe earn. Yes, becoming confusion now. Okay. For me at least. You start your business, you invest $10,000 of your own money. Okay, then what happened? You invest $10,000 of your own money in your business. So that amount going to be debit in the business because it is going to land in my business account. And from my personal bank account, it is going to be credited because there's the starting part of the transaction. Let's see. Um, Cash, $10,000 debit, asset. Okay, cash. You now have cash, asset increase, asset increase, debit because of the ending point. Owner's equity, 10,000 credit. Owner's equity, 10,000. You funded it, equity increase, credit. Okay, equity increase, and you funded. Okay, equity increase, my equity increase because owners pay for it. Okay, asset means what the company value, what the value company contains. Okay, that's the thing. Okay, and because my equity increase because it is because I funded it and it's get credit debit into the asset and credit. Uh, owner's equity. Okay. Example two, you take a bank loan, you borrow 5,000 from the bank, cash. Yep, it's landing in my asset. It's a cash, so it's in debit. Bank loan, payable, liability from where it came. It is the 5,000, which is credit. So you owe bank liability credit. It comes from bank loan. Okay, so if we understand it like that, uh, from that asset come from this owner's equity which they funded. So that's the starting point of the transaction. So let's go into the credit and it increases the owner's equity. That's why the owner's equity go up and it comes from owner equity. That's why it comes in credit. Mhm. And that value is converted into the debit in the last, which is cash. So cash go up and $10,000 comes in debit. So asset debit because it's land into the cash reserve of the business. So that's why it is 10,000 debit. And that's why it increases the asset of our company, but it's landed, it's the ending point of the transaction. So that's why it is coming in debit column. Now, I borrow 5,000 from the bank. So bank is a starting point of the transaction. So it is going to the bank, going to come in the credit, and the ending point of the transaction is a cash reserve of my business, which is cash assets. So it will come in the debit column because that 5,000 transaction ending point is my business cash reserves. So that's why it is coming in the debit column. Okay, good. Okay, so now, okay, uh, that's good. It's making some sense right now. Assets increase 15,000, 5,000 come from liabilities, 10,000 come from equity. So that indicated basically defining the starting and ending point of a transaction. So that's the point. Example, so you buy a laptop for 2,000 in cash. Equipment asset in the equipment category of my business. Okay, that let's visualize it. So if I'm going to visualize it, see what's happened. Okay, if I'm going to visualize it, oops, let's visualize it. So that's the transaction, which is like this one. Try to explain what's happening here. Visualization, as per my understanding at least. So first of all, now, okay. So that's it. That's it. So this is the transaction of this is the transaction. I will say that it is a it will be used here. Okay, I have to open my own brand. Right? So I can open my own browser brand. That would be good. Browser brand. Yep. No, 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 no. Okay, it's fine if we have that one. Okay, so if we see this one, that's good. First of all, let's visualize. It is like it's I can say that transaction visualization. Uh, Sexy. Okay, so wait a second, gaps are several. Uh, okay, so here we go. It is like it is the starting point. It's too big. There's the starting point of the transaction, and what is the ending point of the transaction? So starting point of the transaction going to be the credit. Okay, it is going to be shown by credit. And let me color it. Good color. So listen to my equal color. Okay, it's fine. Okay, and this is debit is the ending point. Okay, so debit shows to create the ending point of the transaction, And I can say it transaction flow. Uh-huh. Okay. So I think I have to buy these color cells. Okay. So this is the transaction flow. It is going in this way. Okay, this way. You can say that. So what is going to happen is that if owner uh, giving away money, this one giving away that money, so that money going to come because owner giving away that money into the business. So owner uh, owner is the starting point of the transaction. So now that point going to arrive here. So what it does, I can call it owner giving away money. So that's the starting point of the transactions. Okay. And what's happening is this. Now it is the ending point of the transaction is the increment in the increase of asset. Okay. 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 Yeah, I think this messes me. Okay. Yep. Sorry guys. Let's see. Okay. Now, it's a starting point of the transaction is that owner giving away the money. So that thing come into the credit because the starting point of the transaction is denoted by word credit. And ending point of the transaction is this one. So what is this? Is that and that's the ending point of the transaction. Now, I would no, that's same. So I will keep it here. Now, and that I think I should change that here with this one. This one. Okay, so here we go. Now this one, that's the ending point of the transaction. It means that it will come in the debit. Okay, so what happened is that it what it does it increases. Okay, now it's converted that money which the owner uh, deposited in the business. It is converted into the cash reserve. Cash reserve. Okay, cash reserve which comes under asset class. So that's it. So cash reserve. What happened is that cash reserve going to increase for so if we are going to make this transaction accounting, what we are going to say that this owner giving away money, there's this starting point, it is coming in the credit side, and the debit side, which is the end point of the transaction, which comes in the cash reserve of the business. um, it will be a debit because it is the ending point of the transaction. Now, we are going to donate with respect to the business. What happened is that if owner going to give away money, I can say that to exactly going on to the business, then what is going to do? It will increase owner's equity. Okay, so in the business term, in the if you are maintaining your business sheet, so how you are going to label this transaction like owner equity because owner paid for this one to have a share in the business. So it is the owner equity, right? We can say this one, and uh, and here that one in your accounting of the business, what is the cash? It converted into the cash of the business, and it comes in the asset because the the value of your business increases with this deposit. So we will know that if if our business value increases or some money comes in our business, so how that that increment happen? We will know that this increment is happened because of that owner's um the deposit of the owner's amount. That's why here it is. You funded means the owner funded it. So the equity of the owner goes up and it comes into the credit because that transaction starting point is the owner giving the money and where it is landing into the cash reserve of the business. So that's why that entry is in debit. And this equity and asset put in here because of the balance sheet. Now, the business asset increased by 10,000, but from where that value increased? And this equation have only two components, which is liability and equity. Liability, others' money, other stuff. Equity means our. So equity here increased in the equation. So the equity increase, so the asset of the business increase. So it will define that if that asset of the business increase, so from where that increment came from. So hopefully you get the idea about the transaction, how it is happening overall. Yeah, it's really confusing concept, but we are doing good. And now we are going to move forward with the next point. Okay, so there's the another transaction. And so I have to visualize all of these ones. The when the liabilities increase, the same thing happening here. If we move forward, I think so I have to change my screen in in a better way. So it will not- Fine. Okay, so that's the visualization of the when our S equity increase. Now, if we are going to visualize the same thing there about if the asset increase, but the equity isn't increased, then how that asset increased? So here we go about this understanding. We can see that. Okay. Remove this. Now we have this equation. Oh my gosh, what it did. Uh, I need a designer, I think so. I'm very bad at so to move this one. I've copied it and lately it really sucks. It really sucks. So it will be good now. Hmm, yep, it's nice. So go and hide. Now, if our business has increased by 5,000, but the equity remains same, then there's a question from where that money comes from. So now that increment is happened for because we borrowed the money, and this is not our money. So this is uh, come under the equity. It will come under the liabilities. That's why you can see the equation written in this way: the 5,000 coming in the liability side, but how the credit and debit uh, recording will happen. Same thing. What is the starting point? We can say the bank is the starting point. Okay, guys. And what's the ending point? Cash reserve of business. Okay, of your business. So that's that's too much. Okay. Uh, now we have to let's try to move up. So now that's the starting point, and what happened is that okay, we catch it here, and what it is, uh, that's so bank loan gave this 5,000, so that's going to come under this. Okay, the starting point there. And now, afterwards, that bank loan coming here. So there's the ending point. Okay, guys, so that's how it is. 5,000 come here and ending here. So that's how we just define what is debit and credit and what is going to be the business terms we use in the sheet when we are going to record. We can say that it is bank. It is bank. Oh, my gaps. It's bank loan and it is liability. Okay, it is liability. It is liability. Okay, and that part. Oops. And that's the point, and that's the cash. It's for a business. It increases my cash, which comes under the asset class. So that's how these two transactions are recorded. Okay, so that's how two transactions being recorded under this one. There's one and there's one. That's why it is coming like this. So hopefully you get the point. what's going to happen, what is happening in the transactions. Okay, so debit credit just showing that what's the ending and starting point is starting and ending point of the transaction. And these are the accounting terms for your businesses, accounting rules of your businesses, and there is the explanation about what is increasing what. That's why it is saying that we will go into this thing. Um, what happened is that bank give us loan, the liability increase, then liability increase, and the credit column increase of that liability. Okay, because that amount comes from bank. So it is liability here showing the starting point of the transaction. And here I'm also getting a bit confused about it, but when we are visualizing it, then it is making some sense. And here we can see that you receive money. So our company is the ending point of the transaction. It is increasing the asset. So the debit increasing. Okay, so it will come into the debit because our company account is the ending point of the transaction. So that's why it is coming under this one. Oh, got it. Yeah, by the time it make more sense. From nothing to something, it's good. So that's why it is still balancing. That's why we see that balance sheet. It is balancing region. Hopefully you have the idea about it, what's happening overall. And yeah, and we have to move forward with this one. Okay, now um, the third example. Here it is. Equipment. Uh, equipment. You buy laptop for $2,000 in cash. What it is doing? It is coming from within my sorry. It is my own company accounts transaction because my company reserve what I have as a cash in asset I am giving away. So that starting point of the transaction going to come in the credit column. Then the ending point is the laptop value, which is the equipment. So which comes under the asset as well of my company. So I am just converting cash asset into the machinery asset of my business. So the end of the transaction is the equipment asset within my business account. So that's why it is coming under the debit column. Okay, got it. And what's happened? Um, Cash gone, asset decrease here. So it, it's come in because it is going away. So that is a starting point of the transaction. So it is in credit. And here you gain equipment, asset increased, asset increase, and it is the ending point of the transaction. That's why it is coming in the debit. So that's it. Only the composition of assets changed. Total is still 15,000 because from outside there isn't input of the money or the output of the money. money. What happening is that we just converted one form of the value which our business contain, which is cash, into the another form of the value, which is equipment for our company. So that's only the value conversion, not the inclusion or exclusion of the value from the business. So it is the within the business value conversion. So that's why asset remains same, just change the form. So but we have to record it uh, within our business. If I say that where 2000 gone, if I give away someone or if I buy something else, so I have to record it. So I would know that okay, these 2000 gone, and it is being converted in another value of equipments which owned by my which comes under my company assets. So that's what it is. Uh, that's the recording of the transaction. So yeah, uh, hopefully we get this point. Example, you earn in revenue. So now the inclusion into something like something is coming into our business. Um, so how we are going to do this thing? Revenue, which comes in income, and that income comes in the balance sheet as the equity. So what's happening? So what's happening is that income increased. You earned income, equity increased. Yeah, it's a if the income of the business increased, so the owner's equity increased, the stakeholders' equity increased, and the but the income is the starting point. The revenue of this transaction is the starting point of the transaction. So it is coming in the credit. The ending point of the transaction is the cash. In the asset class, it is coming in the cash. So here it increases my equity, and so it increases my asset. And under the asset class, it is cash. The cash loss in the asset increase from the revenue, and revenue is it is denoting or impacting my equity in the business. So there's the input of the money in the business from revenue or the income. So that's the key. Now this balance sheet grow, your business grow because revenue increases equity. Example, you pay 1,000 rent. There are so many. I have to be quick. Okay. Example, you pay 1,000 rent and then rent expand uh, from asset. Yeah, I'm going to pay from the asset. So there's the starting point of the transaction. So this is going to come in the uh, credit column, and cash as it decreases, and it's come in the credit, and it's uh, in the income statement. It is coming in the rent expense, and reduce equity indirectly 1,000. Effective of effective on the equation, asset decrease $1,000, equity increase because we are giving away our share or the amount which we input in the business. So because expenses reduce profits, retained earnings. Equity, retained earnings. Yeah. Because expenses reduce profit and retained earnings. Retained earnings means that the profit which I earn from selling a product, I keep in the business, and that profit is reinvested in the product. So that's why it is called retained earning, and it is the form of the investment from the owner into the business. So it increase the owner's equity in the business. So that's why if I'm paying someone to run my business, such as here rent, so I'm paying it from my profits or my retained earnings or my revenue or the income stream, what I like my own. Okay. Uh, from so that's why it is impacting my equity. That's the concept here. That's why we decrease it from 13 to 20, 12, and here we have asset 17, and it is the combination of the sum of these liabilities and equity. Uh, okay, here it is. Now, hmm, example 6. You repay $2,000 of the loan. Bank loan, we repaid. What it does this mean? How I repaid? I from the cash I have. Okay. Now I repay that amount, $2,000. So it was going to reduce my liability and also reduce my assets as well. Mhm. Because I am paying it from my reserve of my business. The starting point of the transaction is my reserve, which is cash assets, and ending point is the bank loan. So it is going to be the debit. So cash asset going to be the starting point means the credit. It comes into the credit, and the ending point here is the bank loan row. So that 20,000, that row comes under the debit column. Okay, let's see. Equation C is balanced, liability decrease, yeah, it's knowing the asset, and asset decrease credit. Yeah, I think it's making some sense now, but this graph really sucks. What I think that what helped me to understand the credit and debit is the visualization of the transaction, like here, which I showed you guys by drawing sh- uh, the picture in the here. So this visualizes a starting point, ending point. Starting point means credit, ending point means debit. So transaction flow, transaction visualization, it is helping me to define which when we have to put the amount in the credit column and when we have to put the amount in the debit column. So credit and debit is a visualization or the just the transaction flow. So if you visualize it, you are able to easily define where that value will come in debit column or in credit column. That's it. Or at least what is helping me right now. Okay, guys. So we are here. Okay. Hmm. The relationship between the equation and a debit credit. Each debit credit pair keeps the assets, liabilities, and equity plus equity equation in check. Asset, okay, type of change. Asset increases. What happens? Add something variable. We add something variable. So the ending point of the transaction is our asset. So that's why a debit asset. Asset decreases, so it is giving away. So the starting point of the transaction is our asset. Okay, asset uh type, or you can say our business asset is the starting point of the transaction because it is giving away or use cash. So it will come in the credit. So it is like credit asset. A liability increase now. I have to my hand here, and let me. Liability increases. How you are seeing it? Okay, it's fine. Okay, for me is like if liability increases means that something is coming in the viability column, in the viability equation, which is this one. So something is coming in this. So liability going to debit. So liability going is increasing. So a liability is the ending point of the transaction. So liability debit. Let's see if I'm. My gosh, I really sucks now. It means liability increases. Borrow or owe more. Credit liability. Why? Liability. Yeah, I repay. Oh, it's not. I'm wrong. That's fine. Liability increases, borrow or owe more, credit liability, liability decreases, repay debit, and debit liability. Okay, I think so. I have to take a break, and afterwards, I will come back and then explore more about this stuff. Okay, because I'm understanding it, but not right. I think so. Or there is a mistake in the ChatGPT. Like we will explore it later on in when it takes for stuff. Okay. Thank you guys.